Good morning, everybody. This is Todd with the Forex Nitty Gritty Insiders Daily Video. I hope you're having a fabulous day and the weekend was nice for you. We definitely had a lot of volatility last week in the market, and this week we'll see how it goes. You know, anytime we start to look for opportunities to deal with volatility, we need to first look at the news, which today there's not a whole lot. We do have we had some news come out over in Germany on their business climate. Came out a little bit worse than the forecast, but that's about it really as far as strong things for today. We do have the Bank of Canada, the Governor Carney speaking, FOMC member Williams is speaking. Later this week, kind of hot topic, so to speak, consumer confidence tomorrow in the U.S., retail, core retail sales in Canada tomorrow, new home sales in the U.S. on Wednesday, retail or current accounts on Thursday for the pound, durable goods, unemployment claims in the U.S. on Thursday, along with pending home sales, GDP in Canada on Friday. So not a ton of news reports, but enough that we need to at least be aware of them. Now, as you know, whenever we deal with volatility, we're dealing with things that make the market more difficult to be able to read. And so, as we look at trying to smooth things out, one of the things that we can look at is using a moving average to help us identify things as they move up and down. And let me just give you an example. Let's go to the hourly chart here and just see how this lines up. You can see, not terribly choppy. This is the Euro US dollar. And we use the 40-period simple moving average a lot. So if we put a moving average on here, we can get a sense of the trend that's happening. And we use that a lot to really be able to determine whether we should be looking at going long or short with the simple trading method. Now, the other thing that we can do with this is it can help us if we cut this down to, let's say, a 10-period simple moving average. It can help smooth out these movements that we're seeing. And so instead of looking at highs and lows on the price, we can look at highs and lows on the moving average. And that gives us a little clearer indication of when things are actually showing strength to the downside or to the upside. And we can do that, if we go down the 15-minute chart. So instead of these big, choppy, volatile moves like we've seen here, down, big up, down, big up, we can look at the moving average and say, okay, when is this thing moving? Now, again, there's no perfect way to do something. We can only look to identify, when things are possibly changing directions. But this will help us, and we can also use the moving averages to help us identify lower lows, lower highs, to help us with the identification of the trend. Now, if we go back to our 40 and look at this can, it's critical in being able to determine what we should be trading. And as we look at this simple trading method, we have to recognize that the number one thing is always to be able to determine the trend in the pair that we're looking at trading. So you should be able to see here pretty clearly that the trend on this 15-minute chart is moving down. Now, the entry in here would have been right here to go short as it moves below the lowest low of the last three. If we wanted to, we could also place on here a secondary moving average. If we went as tight as a 5, you can see that it starts to roll over in the same basic area. And by knowing that and understanding that, we have the ability to have confirmation with our entries. So take some time to look at the moving averages, look at the trends, make sure you understand what you're looking for when it comes to identifying those. And if you can do that, then in the long run, you're going to be right where you need to be when looking for opportunities to trade the simple trading method. So with that, we'll wrap it up. Have a great rest of the day. We'll be back tomorrow to see how things continue. Until then, trade well, and we'll talk to you soon.